Yes, I welcome all the participants for the today's session. So this would be the broad coverage of the session, my presentation, which will be further explained by the Sudhi sir and Madhukar sir. First, we'll see the introduction of the issue and also the then followed by the legal provisions and what does it say, and followed by what exactly was challenged before Gujarat High Court and what Gujarat High Court has given its decision, and then followed by what is impact of this judgment on the compliance or the tax planning perspective of the under GST, and followed by we'll discuss what are the course of action that are available for all of us who are dealing with this kind of similar transaction. And the judgment is not only limited to the similar issue, this issue, and it is also has impact and ramifications in various other issues. So how that can be handled also we can briefly touch upon, and if time permits we'll also explain the various possible tax planning areas in real estate transaction, which can save the lot of tax cost to the business as well as the which will give a benefit to the customer. So to begin with, then being the complex nature of the commercial transaction in real estate, so that the transactions of real estate are subject to many disputes, which are not limited under GST or prior to that, even income tax and VAT and service tax, and to be very specific, under indirect tax, the disputes are gone to the extent of saying that the government have no power to levy tax. For example, in 1980s and that Supreme Court also has held that sales tax cannot be levied on the construction contracts or the real estate transaction. Similarly, service tax also there were various series of judgments where time and again various high courts have been striking down the levy of service tax on different transactions of real estate, particularly was contract. So because the complexity of the transaction, also the unique style of the transaction, it has led to this disputes. Because if you see any trading or manufacture, the complexity will not be there much in the combination of various components. Because in real estate, there is a combination of material, there is a combination of services, and there is a combination of land. So all three components before GST are liable for different taxes, and each department person wants to collect more and more revenue, and government has also made an efforts in the similar fashion. So which has ultimately gone into dispute, saying that this is over riding other law, and other law is overriding this and all that. So when this GST was introduced, it was felt that real estate also will get benefit because of GST, because the VAT and service tax are no more there, and they are going to merge into single taxation. With single taxation, this kind of overlapping would not be there, and there will be cost saving. However, in reality and practicality also, but that was not done, because the way the GST law was made, particularly real estate, it is was quite miserable. The way the amendments were made, and the way the restrictions has come on the inputs, and all that has actually defeated the very objective of GST, particularly for real estate industry. And the today topic is also one of the area where the GST lawmakers have not looked at the real impact of the taxation while they making this kind of law. So this is another example. And Sui sir, you would like to add anything?
Nothing as of now, Venkat, you can continue,
Yeah.
otherwise it gets disturbed.
Okay.
So whenever I wanted to add, I will add.
Okay. So the here at this place, I would like to highlight the entire object of conducting this webinar for all of our clients is to highlight that what is happening, and how how the real problem is there with the GST from the real estate perspective, and whatever infirmities are there in the law, there is always strategies we can form, and plan it well, so that we can save the tax, or we can also avoid the future disputes. and also which in turn benefits the both businessman as well as the customer. So this is one of the objective of conducting this today program. So as I was mentioning, because of three components are levied for different taxes, so there were three different laws, and that's the reason to avoid overlap. What they used to say, for example, service tax and VAT, they say service tax is because service tax can be levied only on the service component. Sales tax or VAT cannot be levied on the service component. What they do is wherever you are able to identify the service component in the real estate transaction, for example, in case of host contract, where they say you do the contract for no 1,000 rupees per square feet, and this is the amount I pay, and there will not be any bifurcation about how much is paid for the labor, how much is paid for the material. There will be a BOQ, but the BOQ is only to give idea, but the entire contract is a consolidated price and there will not be any bifurcation. There the problem is how that identification will be made. So there the service tax, because they can't levy on the total contract because material component service tax cannot be levied. Service tax law used to say that try to identify the service component from your records. For able to identify and justify, you pay service tax at full rate on the service component, and balance material portion will be out of GST, sorry, service tax. Similarly, if you are not able to ascertain that service value from the contract, then I'll come with a deemed valuation. That means I'll come with simple formula saying that I'll deem that 60% is the material component, 40% is service component. You pay service tax on the 40%, and I'll not ask for any records. I'll not ask for any bifurcation justification. This is a deemed or fixed abatement. So these, practically many people would have opted for that 40% abatement, but law is always an option to say that I'm able to identify the service component. I can pay service on the service component at full rate. Similarly, VAT was also made in the same manner, where they says because VAT can be levied only on this material portion, they cannot levy on service portion. They say that I did try to identify the what is the value of material you are using in the contract, and on that only you pay VAT at full rate. If you are not able to ascertain or if you are not able to identify, then only go for the composition scheme. Then only go for the deduction scheme. So that means all along either VAT or service tax, first used to say that first you identify the respectable service taxable component. If it is service tax, service component. If it is a VAT, material component. And if you are able to identify and justify from your records, you pay only on that component at full rate. If you are not able to ascertainable or identifiable, then only go for the abatements or the deductions. So that is how the law was framed. That is how it actually should be. So now under GST also, that is this kind of bifurcation is required, because while service tax and VAT was merged and made it to a single tax, but the third component of the transaction, that is land component, is not liable for GST, and it's kept out of GST, and it's continued to liable for stamp duty. So now the important point is that the land should not be taxed under GST. So then government also aware of this transaction. What they have done is, because they cannot tax the land, they're coming with a notification and saying that because land is not liable for GST, I assume that whatever the contract value or total amount charged, that one third of the total amount charged will be towards the land, and balance two-third will be the construction contract, that means construction value, which includes service and material. Thereby you pay GST only on that two-third, one-third I'll give a deduction. This is where real problem comes, because in the land value they are saying the entire across India, the land value they are assuming one third. So which will not be true in all cases. Forget about various cities or parts of the country. In the very same city, the land component will vary from area to area. For example, Hyderabad, if you see, whatever the area of land component of high-tech city or Banjara Hills will be different from the Uppal or Nacharam. So similarly, Bangalore also, in any city, or be it metro city or non-metro cities. And that is one. The second, that means the one third land deduction is not uniform across the country. not even forget about across the country, across the city, same city. Number one. Number two is that one third is also not very nearest to the at least market value. For example, okay, it may be varying from city to city. For example, if the Hyderabad there is suppose 30%, if it is Bangalore 35%, Delhi 38%. If that like that, if there is some nearest percentage, it is quite understandable. But if you see the actuals, I will show you the examples. We just take an approximate value. This may be varying from the actuals from your each project or each city. So if you see these examples, if you take a highest example of Mumbai, the land component is 85% almost. Whereas in type 2 city or small cities like Karnool or Kakinada and all, the land component will be less than one third. So there's always almost opposite situation. The land component is more than two-third of the value, but government comes and says in any case the land value is one third. So that is where the real challenge and real ambiguity in the law, where instead of giving scope for the actual deduction, they are saying that one third is uniform across the country, uniform in any project, and I'll only give one third deduction and two-third you have to pay GST. That is where the real ambiguity is there. This is the example we have given to showcase how much extra GST being collected by the government by giving this less deduction of one third. For example, if you take Hyderabad example, we have kept the sale price as a common to just show the how much loss is being happened to the customer at every flat or every unit. So, for example, Hyderabad there is excess collection of 2 lakhs. So in similarly in Bangalore 3.75, Mumbai 4.92. Sorry, Delhi. Mumbai is more than that. So likewise, there is almost for every unit there is excess collection of tax. Likewise, if there are 100 flats in a project, it's almost it is 2 crores in Hyderabad. If it is Bangalore and Delhi, number is more. Likewise, it is the method of giving only one third as a deduction is not as per the law, and some it is against the basic principle that what cannot be taxed directly cannot be taxed indirectly also. So that way, this is what the real challenge was, challenge before the Gujarat High Court, saying that where I have I'm identifying the value of the land, and if that is the case, government cannot come and say I disregard your actual valuation. I'll only give the one third standard. I'll not give the regard for the your actuals. I'll say every case it is one third on universal basis is not correct. That is what the exact challenge was made before Gujarat High Court, and they have also given a sample agreement saying that there the customers agreements are clearly identifying, saying that whatever they are total value agreeing, the land component is this and construction value is this, and thereby my agreements also customers and the builder has clearly agreed that this is the land value or this is the construction value, and thereby in that case the deduction cannot be restricted or limited to one third. That is what the real challenge was made, and there are some technical arguments. So I am not getting the technical arguments because we would like to discuss more on the practical handling of this judgment rather than the technicalities. So what High Court has, after hearing the both the sides, the what High Court has said is that when actual value is available of the land, then you cannot force the fixation, or you cannot fix, or you can force the deemed value or notional value. You shall give the deduction of the actuals. You cannot force the notionals or the deemed fiction when there is a actual values are available. That is the thrust of the judgment. And they are told whatever the value agreed in the agreements, that is sufficient justification to say that they can take the deduction. And accordingly, they read down that notification where it provides one third is the only deduction you get. And then the department has come with an argument saying that, my lordship, if you allow like that, then the builders artificially inflate the land price in the agreement so that they'll end up paying less tax. Suppose they may say 1.5 crore example what we have taken, they may say land value is 1.3 crores and 20 lakhs is only construction, and which may vary from the actuals. In that case, The court has beautifully answered that argument, saying that if that is the case, if you are doubting the correctness of the bifurcation between the land component and the construction component, the records of the taxpayer can be verified, and if the service component or construction component is more than the cost plus 10%, that is justifiable. If this the service component adopted by the taxpayer is less than the construction cost, then it is questionable and it is rejected. It can be rejected. Whereas if it is justifiable with that construction cost plus markup, which was given under the rule, same law of GST, where Rule 30 says construction plus cost plus markup is a allowed method of valuation for arriving the taxable value for GST, then you cannot come and say that because of that doubtness, I'll deem everybody and say that one third is only the I give and rest everybody has to follow irrespective of actuals. That was disregarded and told that wherever you correct doubtness the if wherever department doubts the correctness of the land bifurcation, department has always have power to invoke Rule 30 and say that you give the records and justify how this land bifurcation has come, and if that is not able to justify, then you can reject their value. However, if they are able to justify, then that should be allowed and that should not be rejected. That is the answer given by the High Court. So the impact of the judgment is, to put it other way, that we can take the actual land deduction instead of the one third. So for example, the example what I have given here, so thereby we can save this much of tax for the every customer. So instead of we paying 7.5 lakh GST, we can pay 5.3 lakhs. Thereby 2 lakhs we can save. Similarly, various cities or various projects depending on the sale price and also the land component. We just taken an example and approximate figures. Depending on that, we can work out and say that this much the tax savings we can make out. So that is the impact of the judgment. And however, wherever we are planning this kind of actual deductions, we should keep it in our mind that whatever the bifurcation we are making between the land component and the construction component, the transaction value shall not be less than the cost plus markup, because that GST law also says that minimum value, this should be the minimum value. Otherwise, unless some market factors influences, it is always safe to at least to show that construction cost plus markup is that should be the taxable value, and rest everything we can take it as a land component and we can take the deduction. We can only pay GST on that service component. So this is the impact, and these are the various other grounds which we can also, of course, these are not argued in this judgment, but these are other arguments which can support the rationale of the judgment. Suppose they says whatever the arguments was findings of the court is not correct. It's not that, and there are other arguments which we can place before Supreme Court or other High Court to justify the rationale of the judgment. So I'm not getting into it because we see the other things now. Then as I was telling, so the impact of this decision is not very limited to the deduction of the land component in the GST payable on the customer transaction. It is also important and relevant in the various other cases. For example, if you take an example of landowner JDA transactions, they say that for payment of GST on the landowner share, you take similar value or first sale value of the project. So that is where again the problem is. If we see that the difference between the transaction with the landowner and transaction with the customer, the difference would be that with the customer, I construct and also transfer the title, give the land portion to the customer. Whereas I don't transfer or do any transaction of land with the landowner, because landowner is only owner of the land. I only construct and give him the houses. Thereby, we can say that that first adoption of the first similar value is not correct. It should be restricted to only the cost plus markup, and whatever the deeming fiction created in the notification to say that you go for similar flat value or first sale value of the project is incorrect and it is against the scheme of GST. We can argue, and this judgment also it was touched upon to say that valuation cannot be prescribed in the notification, and in the act says that something else is the value. You cannot come in notification and give a different valuation. There is one relevance of the judgment in other cases. The other relevant point is that this is, of course, this is not a new issue. This is their settled principle under VAT and also service tax, which was also explained and emphasized that it is relevant, still relevant for GST also. The worst contract starts only from the date of entering agreement with the customer. That means whatever the work done prior to entering agreement is not liable for, it is not a worst contract, thereby it is not liable for GST. So to put it otherwise, to give an example, for example, there is a construction project was started in the year 2020. That means for the real estate, the project was started in 2020 and customer has come in 2022. By that time, suppose there is a completion of 70% of the work is completed, only 30% of the project is pending. So then the rationale of this finding is that GST is liable only on the 30% of the component, not on the 70%, because the and post contract commences only from the date of entering with the customer till 70%. It is only self-service and GST is not liable on that. So that also we can take it. I think we are going to we'll discuss in the end also if anybody has wants to elaborate further. And this is not only in this one-third deemed deduction, land deemed deduction. This rationale of the judgment is also applicable wherever government do not give the scope for actual value deduction and goes for the some standard methods or reverse, mathematical precision instead of going into the actuals. For example, various Rule 42 reversals, it simply says that you reverse as per the formula. They don't give scope for the actual records to maintain that what is ITC has gone to the my exempted supplies and what is ITC has gone to the taxable supply. There also we can refer. And you would have seen in renewable energy industry, particularly solar, they are saying because 70% is material and 30% is services. So you pay GST at 12% now on 70%, 18% on 30%. So that is against the scheme of GST, because the section 8 of GST very clearly says wherever there are mixture of goods and services, you determine the, based on the main services, you determine the rate. And this kind of artificial bifurcation of 70%, 30% by way of that, too, by way of notification is again against the or contrary to the scheme of GST. There also this judgment is important. And now the point is okay. There is a, this is not a final verdict of the judiciary, because it is only high court judgment. Now what are the options available for the government? First option is always, of course, which they may or may not do, is that because it makes sense also the judgment. So implement this judgment and make necessary amendments in the law. That is one, because unlike other issues, when while framing this one-third land deduction itself, there are various state governments has asked for it, and they are told that this one-third may not be true in all cases, and you have to give higher deduction towards the land. That is what the some it is recorded in the GST Council meeting minutes, 14th GST Council meeting, and of course it was discussed in this High Court decision also, saying that some states also has explained that this is one-third is not correct. But for what reason it was finally agreed is not clearly coming out from that council meeting minutes. But that being a case, so it is better, gives a better chance to say that even government also is aware of that, this should be given more deduction. So keeping that in mind, one option is that they can implement the High Court decision and make necessary amendments in the GST law. This is one. The other option is, of course, going to Supreme Court against the High Court decision. That is also available. And third option is make a retrospective amendment to the GST law. So, however, that retrospective amendment may not cure the defect pointed out by this High Court, because the High Court told wherever there is actuals are available, and you can't come with an arbitrary fixation of some value and say that this is the value I fixed and you pay GST on it. So because they are told this is unconstitutional, so now for this deduction, they if they amend constitution itself, of course nobody can do anything. But if they don't amend the constitution and they only amend the GST law, I think that will not be sufficient to overcome this rationale of the decision. And still we can take defend this amendment and say that should be given on actuals, not on the one-third only. And of course, while making any necessary amendments, they may come with a different. They can come with one maybe that whatever the state government fixes the stamp duty value that they can come, or else they can say that based on the value of certificate they can take it. So those are the options available to the government. So far we have discussed. Now we'll discuss the what are the possible course of action available to the taxpayer. That means builder or developer or also the customer. So these are the various options which are available. So as far as the past period, because so far I think very less people leaving very less people. I think most of them would have paid under the same deduction of one third and they would have paid on two third. So what, because this leads to higher payment of tax, as I have shown in my one example. So what we can do is whatever the past taxes paid, excess tax paid, we can go for a refund and ask for the refund from the government. So this is one option. And if it is that burden was passed on to customer, that means whatever the higher tax was already collected from the customer, then there is no point in going for refund, because the department simply says that because you have passed on the burden, so I will not give refund to you. So instead of getting into that problem, so what we can do is we can ask the customer to go for refund, and whatever the documentation required, we can support that. That is another option. That is an option in the in the case of refunds. So this is for the past. Now future. That means henceforth what we can do is still because we are not sure what government is going to do, whether they are going to implement the high court decision or they are going to appeal it to Supreme Court, or they are going to amend the law and all that. So to safeguard the taxpayer or the builder also. So at the same time, keeping the option open for the future claims, what we can do is we can continue to discharge GST under on the one third deduction only, that means two third. And what we can do is we can launch a protest and say that we are paying on the we are actually liable only on the actual value deduction, after actual value deduction towards the land. That means in my example, it is not 7.5 lakhs is the liability. It is only 3 lakhs or 5 lakhs is the liability. Whatever the 2 lakhs is paid is excess payment. But because we also understand that issue is now is lying in the court, we would like to pay it under protest, and whenever the issue attains finality, we would like to claim the refund. This somehow will keep it the option open, and the same time it will safeguard against the future risk of demands. This is another option available for the future. And to justify either of the past or the future, it is always important the documentation. So thereby whatever the customer agreements with the customer, we should have a specific clause in the agreements about the what is the land component, what is the construction component, whatever the components we have identified, that should be justifiable with the actual record, that should be there. And about other above options, so we can also make a representation to the council. I think we already made in the representation in the past. We can also ask for the council to implement the decision, so that way it also sensitizes the government to to get the feedback and also the demand of the taxpayers as well as the customers of the real estate. So which we can in a way reduces the tax burden on the home buyers. So of course, wherever it is feasible, because most likely when you ask for refund or when you ask for less tax, the officer is going to say that the Gujarat High Court decision is not going to bind on me because it's not in my state, and all that they're going to trying to escape. But legally, yes, it is binding on them, because the High Court decision is on the central law, which is uniform across the country. They cannot escape. But to avoid this kind of practical problem, what we can do is we can also file a similar petition in High Court, and we can get the specific orders from the High Courts. So these are the this so far we have seen this course of action what we can do. While doing course of action, we should be clearly bear in mind that wherever we are taking the actual deduction instead of the deemed deduction, our agreement should be identified the land component and also the construction component, and that identifiable component should be justifiable with the our internal records as well as the external records. Suppose we are saying that my construction cost is the so and so 2000 plus 10% is my markup. The 2000 should be justified from our records. How much 2000 has come, how it has come, what is the purchase, what is the labor component, and also the various expenses that are time to time we are incurring. At the same time, whatever the land addition we are taking, it can also be justified by various documents. That is what I was no. This is the broad justification what we can give. For land component, what we can take is that same state government, which is also party to the GST law and which collects the GST also. If whatever the values they are prescribed, if that is sufficient to substantiate our claim of actual deduction, we can give that the notified land rates of the government. There we can say your own state government has notified this is the land rate in our area. So that is sufficient basis to say that this is the land component, rest is the construction component. Or else this is it is not that all cases this will justify our claim, because in some cases that government notified value will be substantially different from the actual market value. So in that case, what we can do is wherever this land was taken on a JDA basis, we would have agreed some percentage of sharing with the landowner. So that percentage of land area sharing is nothing but the percentage of the land component in the project. That means if I say 60% is the landowner share and 40% is the developer share, that means 60% is nothing but the cost incurred towards the land. So that can also be justified, and thereby we can say that 60% is given to the landowner only for the giving land. That means my entire project cost is consist of 40% is construction, 60% is land. And this is one other mode of justifying our land value deduction. And third is that you periodically you take a value of certificates, and because that value or certified value should be there, they will give a certificate. Based on their certificates, we can claim the deduction. So it is not one-time affair of taking certificates and taking the deduction for a lifelong. It is always better to take periodical and frequent certificates, because that values also keep varying. So what is the value today may not be there in the next year. So that is another method of justifying. I'm sure you must be getting various other options for justifying the land value, but these are some indicative methods of basis to say that this is the land value. So so far we have discussed this issue of this land deduction. Now, sir, before Sudhi sir, you would like to add anything, sir, before I get into the slide?
I think at this stage from me, Venkat, Madhukar sir, you wanted to add something?
Yeah, I
Yes,
think
sir.
Venkat has covered most of the thought process. The most important question which comes is, what are the options for various people? And I think one other important aspect is that what do we think should be the way forward? Because so many options are there. I think that second question I will try and answer first. Our understanding is that the risk of this decision being reversed is small, even if the department goes in further appeal. That is our understanding of this. In fact, some of our clients, not many, some of our clients have already taken this view and taken the deduction for either the market value, or while taking care that it is above the cost of construction plus 10%. This is a view which some people have taken, and the good thing about this is that we have taken, our clients have taken this particular option after informing the department of these grounds, whatever grounds have been taken. In fact, some additional grounds also we took, which I think Venkat has also explained. What more grounds could have been taken is something which Venkat had explained. So my understanding is that depending on your risk appetite, I think that you can go for a refund. But the question which comes is, that will the principle of unjust enrichment apply, where I have collected the amount from the customers. So first point, which is very important in this is, if I have an agreement which is all inclusive, I have not bifurcated the GST separately, then whatever the GST cost I have to, and therefore in such cases unjust enrichment will not come. I don't have to contact the buyer at all. Directly the builder can go for a refund, and if the refund comes, it will come into his account. No risk at all. If it does not come, even that 5% chance that there is a reversal, only the litigation cost will be his cost. So this is one aspect which I want to bring on. Of course, if someone wants to be ultra careful, they want to ensure that they don't have a contingent liability in their books, then they may choose to take the option which Venkat has said of claiming and in future paying under protest. The other thing which is important is that there are some arguments also which can be taken from logical point. One point is that the principle of 1/3 deduction, as demonstrated by that Excel sheet, also proves that one size fits all is a arbitrary type of thought process. And if we look at the interpretation of statutes and the Constitution of India, both of them, Article 14, as well as the principles of purposeful construction or golden rule of interpretation, it says that wherever there is something arbitrary, it is not valid in law. So there are enough of grounds, I think, to take a view that we will go for a refund. Only problem which comes is, in case you have passed it on to your customers, then unless you collect it, you pay it back to the customers, you can't go for a refund because unjust enrichment will apply. However, in that case also, if you have a landlord involved, where you have paid on, the 2/3 instead of taking only the construction cost plus 10%. Remember, when we take construction cost plus 10%, we are eligible for ITC. So on the construction cost, it will not be 18%. It will be only approximately maybe about 5 or 6% will be the impact, which is a substantial difference. So especially with landlords, this particular portion of the refund landlords can claim, the builder can support in fighting that case. And in case the landlord gets it, he gets it. That's it. Landlord can go saying that I have unjustified, I have paid tax which is not justified, not as per law. This is something which we need to keep in mind, especially the fact that ITC proportionality also will be there. So we'll further, save. It's not only that 7,50,000 versus 3 lakhs which you are going to save. It is going to be proportional to the ITC. So you can save some more. One aspect which I thought of valuation is that many of the times the builders get into an agreement with the landlord, where the landlord says, especially in Bangalore or Mumbai, landlord says 75% or 80% of the constructed, portion should be mine. In that case, one more option we have is, if 80% is the landlord's value for the land, then you should be paying only on 20% and not on 67% or 66.66%. That is one more thing I thought I will add to it. As we go along, maybe I'll add something more. That's what I wanted to add at this point of time. Venkat, you can go ahead.
Yeah, Venkat, a few things I will add, sorry.
Yes, sir. Please.
Yeah, before we get into the other tax planning thing, as far as the fixation of the value of the land, one thing which we should be very clear is that what is being agreed by a developer and his customer in terms of a contract, that valuation cannot be generally overturned unless until it has been made in such a way saying that it is not logical at all. So first fundamental thing which we have to look into it, all the new agreement of sale which is being entered, there can be a clear bifurcation of the value towards the land and towards the services separately. Say 1 crore is a flat which is under sale, and 60 lakhs is what you are agreeing towards the undivided share of land, and 40 lakhs is towards the construction. Then, if this has been documented in the agreement of sale, there are sufficient decision, including which has been referred to in this particular judgment of Gujarat High Court, that Ganesh BD work, where they have told that the government authorities cannot rewrite the terms between the parties to the contract. It was an income tax case. So that has been made very, very clear. So that will remove the ambiguity. At the same time, we also have to ensure that it is not very, very unrealistic bifurcation construction with about 10% of the margin could be ensure that it is going to be there as far as that particular the project is concerned. The total amount is being suffered tax on this particular thing. So that is going to add a lot of what you call judicial way of looking at it. So in nutshell, what you could do is that you could calculate. Say, for example, somebody is making a sale of a flat at 8,000 rupees per acre, and the cost of construction is estimated as 2,500. So what one could do is that they can easily go for a 3,000 and 5,000 breakup, where they can say 3,000 is towards the construction, which actually has a 500 markup for a safer buffer, and 5,000 rupees is towards the land. So this will ensure that the tax of 7.5% is being paid only on 3,000, which comes to about 250 or something, vis-a-vis the entire 400 rupees, 5% on 400 rupees, which has been paid. So this is something which could be looked at, and when the market price increases, 8,000 becomes 10,000, then you could also consider a slight increase in the construction also, when might in addition to what you are making into a land. So this sort of a bifurcation, not actually looking at a evasion of tax, but the proper planning of the tax, which has been agreed by the customer, if it has been documented, I do not foresee many challenges coming here. To be one of the things which we are not very sure how the government could do. One of the things is that section 15, if you make an analysis, section 15 subsection 5 makes a reference that they can disregard any value, including the transaction value, and the value as notified by them from the notification would be a deemed value for the purpose of assessment. That power has been there, but it becomes very, very difficult for them to deem a value by a notification for all class of builders. So although this provision is there for the government, I am not very convinced that they'll be able to come up with this. So that is something which you could look at. As far as decision in past, Madhukar sir has what we need to do for the past, Madhukar sir has already covered that if you have collected from the customer, it becomes difficult for you to go back and do the re-quantification of it. However, if the incidence of tax has not been passed on, that is, it is an all-inclusive price which you are selling without GST, then there is something on the past also you could look into it. While determining the value, the judgment also makes very clear that there is an alternative mechanism. There is a cost plus 10% has been prescribed under the valuation provision. So that could be adopted is what the judgment is clearly telling. So for the past where the incidence of tax is not being passed on, and you are looking at taking a refund, you could also look at what is your cost, which is there in the books of plus 10%, and the balance is towards the land, and you can do a recomputation and go for a refund, which is very much possible. In fact, this writ petition was also pursuant to a refund rejection which was being made, and they made it very clear it was being filed by a recipient, a customer went for it. In addition to two writ petitions which was there as an advance ruling challenging, three writ petition was a common order which was being passed. So they made it very clear the recipient should be eligible for the refund. Very important point in this particular judgment, there is also a remark which has been made by the department additional solicitor general, where they have told, sir, if we leave this mechanism of adopting the land value, they may say 99% is land and 1% is the construction, and that becomes very uh, uh, it becomes very biased or unjudicial. So that also has been answered here, and they have told that what has been agreed, and you have the valuation mechanism, that is the cost 30. If these two have been there, that could be sufficient. So considering this, I think a lot of points what department could raise has been already factored in this particular judgment. Thereby, one can follow this particular judgment. Another important question which already has started coming to me by various people is that, Sudhi, this is a decision of Gujarat High Court. Will it apply to state of Karnataka? Will it apply to Telangana? Will it apply to Madras or Chennai? So that is the question which has been asked, and maybe a lot of people are there. One thing we need to understand is that this is a national tax, national levy. What is taxable in Gujarat is taxable everywhere. What is not taxable in Gujarat is not taxable anywhere, because it's a common act which we have been governed with. So that is one fundamental we need to understand. However, there is no, this decision has a persuasive value, but it cannot have a binding precedent on the officer. The bindingness will be there only for this party to the appeal. The enforcement can be done only for the parties to this particular writ petition. However, the ratio equally applies to all India. However, I think Venkat is also told about this in the course of action. However, to be very clear, where the stakes are more, it would be very wise to file a writ petition under the local jurisdiction, and most of the cases, because it's a very well reasoned order as far as the Gujarat High Court decision is concerned, and there is high possibility that they would follow, and a specific writ in your name could be was sought. So these are the few points which I wanted to add to Venkat. I think he had covered, but I wanted to emphasize on these points. That's all with me, Venkat.
I have something to add to what Sudhir gave a very good idea, which Venkat had also mentioned, that in the particular state you can go for a writ. But I have also seen in the past, in these 30 years, that sometimes we go to the wrong persons who don't understand this law. Though they know many other laws, they may be great in criminal or civil suits, but they may not be good in this law. And therefore, if you are going for a writ, please ensure that the persons who are going to represent you, the advocates who are going to represent you, are going to be those who have an understanding of GST law. As we had said earlier, whatever the Gujarat High Court has said, we will take those contentions. And the additional contentions which Venkat has also brought about. And in that, I think one more additional contention could be the questioning about the Schedule 3. Bring out Schedule 3 and say that that also is arbitrary when they say that they want to tax the construction in progress of complexes. That also can be questioned. Like that, we can add a few more valid, supporting arguments, which will make the writ even stronger than the writ which was made for the Gujarat. Go ahead, Venkat.
Yeah, thank you, sir. Yeah, so far we have discussed the issue of this tax planning, which can be done by virtue of this taking the actual land deduction instead of the 1/3, and which is now supported by Gujarat High Court decision also. Now we'll see the what are the top other four areas where we can save the and plan and save the tax component or tax being a cost to the project or the customer. The one area is that as all of you know, from 1st April 2019, there is a scheme of 5% without any ITC. That means GST rate is 5%. There is no input credit. If it is affordable housing, it is 1% without credit. So they have not given any option of paying at full rate with taking the full credit of ITC, which was there prior to that. So this is again, they are forcing a condition to go for a composition scheme without giving choice or option for the taxpayer, that is builder or a developer, to choose between composition vis-a-vis actual regular rate. This is again not only arbitrary, it is again the scheme of entire GST, because GST is only on the value addition. It cannot be levied like some entity tax or something like that, and saying that whatever transaction is there, I am pay GST. GST is on value addition, and value addition tax and value addition is only validated when it is levied only on the value addition in the hands of the taxpayer. Suppose if I being a builder, I only add the value in the form of converting cement and steel into the flat. So that is only value addition I am making it. So thereby, the restricting input credit is against the principle of GST, and that too making it as mandatory that you have no other choice. You have to go by this. Without ITC, you cannot get the ITC, and you have to pay at full rate. 5%. You don't get ITCs against the scheme of GST, which you can challenge. And we already filed one petition in Telangana High Court, and I think that was heard partly. So we're waiting for the judgment. The other high courts also, I think one or two petition was filed in other high courts. So, but it is also a very good area, because if we see this 12% with ITC is many cases it is beneficial, most specifically for the smaller projects. If it is very premium projects or very high rise or high price projects, this may not be beneficial. The 12% with ITC, wherever there is smaller projects, this 12% with ITC is beneficial, and thereby, so that is for them, it is very comfortable, and they can challenge, and so they can make some kind of planning, and they can save the lot of tax here also. This is one area. Sudhi sir and Madhu sir would like to add anything in this first point, sir, before I get into the third. That's three.
Do you want to add or shall I?
Yeah, as far as the 12% with ITC for all new projects is concerned, this makes more practically viable for the villa projects. So where the land can be independently be conveyed and the construction can be done with a separate contract. So that is something which is very easily doable without much restriction. So that is something which I wanted to add it. Yes, that's all, Madhukar sir. You can go.
In our experience, there were many builders who had accumulated ITC, especially because in the service tax era, I think prior to 2008, 2016 or 17, Venkat can give the correct date. There was no restriction for reversal of service tax on the completed projects. There was a loophole in the law. So that loophole had led to large accumulations of ITC. May also be because of timing of projects. Large number of projects taken up, sales happening slowly. So there is a huge accumulation of ITC. This I'm talking about prior to 1st April as on 31st of March 2019. In such cases also it is very important. One looking into the future problem, which I am expecting, is this 5% mandatory levy which was bought came along with a lot of conditions. If you see, the conditions are about 3-4 pages long. So obviously there will be a lot of areas where the builder may not comply with those conditions. But if he doesn't comply with the condition, what happens? The 5%, yes, the builder has said, okay, I'm paying 5%, but he doesn't comply with many of the conditions. Maybe the procurement of steel, cement, etc. 80% had to be procured from registered sources. He may not have done that compliance. He may not have done many other compliances which they have set out. If the compliances have not been there or some flaws are there in the compliance, all these notices will come in the year 2023, 24, 25. And when these come, when these particular notices come, the option at that time of going back to claiming this 12% with ITC should be specifically prayed for. What I'm saying is, when we file that reply, we should say, if you're not giving us, if you're denying this option, allow us the option of ITC, which is a right, because as at that time, this was available to me. This is something we may have to ask, because code, unless the code directs that it be reassessed in the following way, the builder may come out as a loser. This is very, very important. At that time, one more point which can be specifically asked for is, this particular scheme of 1st April 2019 required a reversal as per the formula. There was a huge amount of reversal done by many of the builders at that time. You should also ask for reinstatement of the reversal in the light of the fact that that 5% is being rejected. Give me a reasonable option. That is the way it should be asked. I think these 2 points we may have to keep, but it's a little futuristic. Remember, sir, all the people who are listening to us, sometimes right in the beginning, assessment of the possibility is better than following the herd. Many times we follow what everybody follows, and then some person plays it safe. Remember, the big players in this market who have understood this would have negotiated, would have given their quotes to the customer where GST is shown separately. But in the end, they will say that all-inclusive price they will arrive at, and that price is the price which is, finally taken. And they will say, we will take the hit of GST. We will absorb the GST. We are giving you a discount on that. The large players will play like that, and the smaller players may think the large players are also taking this option. Many of the larger players have also paid under protest, but those protests have never come up for hearing. What I have seen, a couple of them, they have paid this under protest, so they have kept their rights alive. This is something I wanted to share as far as the 12% option is concerned. I'll come back on other things, or maybe something additional also to this. Over to you, Venkat.
Yes, sir. Next, the another area where the planning is possible and thereby a lot of savings can be made is the JD arrangements. Of course, at this stage in this session, we are not discussing the integrities of how GST has to be paid and what value it has to pay. We have only touched upon the planning possible areas in this JD arrangement. One is that whatever the development rights the government is insisting the developer to pay and reverse charge is is legally questionable, and we can know wherever it is possible we can challenge and get the that demand get away. Then other one is the adoption of the value, taxable value, that as I was discussed in my presentation also, the notification says you have to adopt the sale nearest to the JDA and pay GST on that value. That means there again they are saying that I don't get into the your actual records, whatever the similar flat what you have sold to your customer, you take that as a basis and pay GST to the on the entire area given to the landowner. Is if you take an example of, suppose you take a 7,500 or sorry 5,000 as a sale price of customer, and they say our construction our taxable value is two-third of it, thereby that is 3,500, on that you pay GST on the entire area of the landowner. Suppose we give some 1 lakh square feet or 10,000 square feet, 10,000 into or 1 lakh into 3,500 would be the taxable value on which we have to pay GST. So vis-a-vis we paying under construction cost plus markup, that is will vary substantially because construction cost will not most likely it will not exceed 2000 or 2500. Thereby we can save tax straight away on this 1000 plus 10% into 5% or whatever the 18% in year. So there here again we can save so major portion of the GST liability when we make this kind of arrangement. And also wherever we are not getting into this kind of deduction dispute, if wherever we are making any first sale also possibly to favorably to make it at a lesser price, so that the entire landowner share can be taxed at a lesser value, and major substantial portion of tax can be saved. So likewise, there are various possible planning areas in the JD arrangements itself. And another important also point is that this what even under 5% scheme also, the landowner is going to get credit of the whatever the tax charged by the developer. So many times landowners will not be taking registration and will end up not paying GST on their customer sales. So and tomorrow they come and ask the developer and saying that because whatever the GST I have paid, so you should have told me I would have collected from the customer and all. So to avoid all those dispute in the future, what landowners can do is they can register, and whatever the GST charged by the developer, and that can be proportionately adjusted to the sales made to the customer. Thereby, there will be a no cash outflow or extra cash outflow in the hands of landowner. So whatever the GST charged by the developer can be adjusted to the customer sales, and whatever the amount charged from collected from GST collected from the customers can be taken and can be given to the land developer. So developer obligation is also completed. At the same time, landowner obligation is also completed. There will not be any double taxation or double payment of tax. Entire compliance has been made smoothly. And tomorrow also department have any other no other point to say that you have not paid or you are short paid and all. So this is another practically many people do not get into this. They simply collect and or they simply put it on the developer and leave it. So that is another important planning area which we can make it. Yes, sir. Sri sir and Madhu sir.
As far as I think it's a right point to look into the valuation mechanism. First sale value can be favorable or otherwise. If at all you think the first value will be favorable, you can always go with that. If it is otherwise, it is becoming expenses, you can always look at cost of construction plus 10% as a valuation. And one of the questions which may be coming is that Sudhir, at the beginning of the project or the mid of the project, I may not be knowing the total cost of the construction, what to do. So you can always opt for the estimated cost plus 10% and revisit what you have paid post completion. If there is a shortfall, you can pay, because the payment is the last date for the payment is OC, so it will not invite any interest if at all you are paying in advance. So if it's an excess payment, you can always go for a refund of it. So this is something which you could look at. But I'm sure the way the cost is getting escalated in the construction industry, whatever you would have estimated, the actual cost would have gone up and it would have not reduced. That is practically something which we have been seeing practically. So that is something which we could look at. Very important what Venkat told is that many of the cases the landlord share has been kept in suspense or it has not been tackled at the beginning. So educating the landowner at the beginning, saying that he will not be out of pocket if he is able to sell it to his customer during the completion certificate, collect that money and give it to the developer, and he will also take a registration and file the returns by making the payment after taking the input tax credit given by the developer. So this is a very wonderful mechanism. Yes, of course, there are few landowners who want to hold the inventory till the last moment to get a better pricing, because the fully completed flat is always have a better pricing, or they may have some other plans which they may not be cooperating. In which case, that 5% which is being charged on that particular units handed over to the landowner becomes a cost. So that is something which you have to make it clear to the landlord on the day one. Development rights, there are a lot of demands which has now been started on that. There is DGGA is actively looking at all the joint development agreements, at least in Hyderabad. So we are looking at having a proper what do you call this issue is going to come up very soon for various people. So the development rights which has been transferred is something which could be contested, as Venkat has rightly told, because it is in the nature of transfer of immovable property, which is not been subjected to GST. So these are the points just to reinforce or reinstate what Venkat has told. Madhukar sir, you have something to add here?
No, not for this point, but I have one caution which many people make mistake. Sometimes builders are taking what I would say dummy agreement to artificially deflate the sale price of the first apartment. Remember, this is something which 100% will be coming into scrutiny. And therefore, my advice is see that that particular price is not much below the cost of construction plus 10%, number one. And second advice is avoid transactions like this happening with related party, and also avoid transfer of that property immediately thereafter. Say now I am Sudhir and me get into this arrangement, and after I buy it, first sale is taken, and after I buy it, I sell it off. That may be also a trigger for investigation. Remember, all these things are looked with a lens, and therefore this is my value for the. It's not exactly on the Gujarat High Court, but this is something which I have found sometimes people make this common error. Yeah, go to the next point, please.
Yes, sir. So next point is on the GST liability on the construction work till customer comes in. I think this is also one of the rationale that is coming from this High Court decision. Of course, this rationale as there, this logic was explained by the Supreme Court in the past, in 2014 and 2005 itself, where they have told there would be a work contract only once after customer coming in, and that from that point only that whatever work done is liable for GST or liable for VAT at that time, now GST, that whatever so far work done till the customer coming in, it is a self-service that cannot be taxed. So this may be practically maybe difficult in the regime of where you take full ITC and pay at full rate. So in the scenario where you under the composition scheme of 5% and you don't take any input credit, this is more beneficial because in the case of 12% with full ITC, you may end up reversing a lot of ITC because you are not paying on the total value. In case of composition, it is very beneficial. I tell you an example. Suppose there are 100 flats we have started constructing. Out of 100, suppose we are giving some 40 flats to the landowner. So forget about 40 flats, we already discussed. Now 60 flats I have to, whatever the sales I make it before completion certificate. So there is a GST liability on it. So 60 flats, suppose in first year, that means take example of the project was launched in year 2020. So out of 60 flats of the builder share, 10 flats were sold in the year 2020 at a sale price of, let's say 5,000, and GST has to be paid because there nothing was started at that time. The total value you can pay after deducting the whatever the land deduction what we have discussed so far. Suppose out of 60 flats, some 20 flats were sold after 3 years of the construction, and by the time that 3 years, 80% of the work is completed. Only 20% is left over. That is also only some small finishing works and also this furniture work and all that. The applying this logic and this rationale, what we can say is I am liable for GST only on the 20% of the sale price and not on the entire 80%, 100%. So, for example, we sell the unit at 1.5 crore. Suppose we are taking land deduction of 1 crore and 50 lakhs is the construction cost. Out of 50 lakhs, 80% goes for the self-service. That means 40 lakhs goes out of GST. What remains is only the 10 lakhs. 10 lakhs into 7.5% we can pay. That will not exceed not even 75,000. Vis-a-vis 5% on the entire 1.5 crore, or even on the 7.5% on 50 lakhs is much more better than more than this 7.5% on the 10 lakhs. So that is where we can make a better planning and we can save the substantial portion of taxes, particularly where the units were sold after some point of time. I think unless some very top or big builders, most of the builders will be selling at least will be selling 30 to 40% of their sales will happen in the mid of the project, either the close to the completion or before the completion. So thereby in those all those cases, this area this gives a lot of savings in the tax. However, while making this planning and while taking this stand, it should be supported by the percentage of work completion. So before RERA that may be problem, but after RERA every periodically we have to submit our records to the RERA authority and we have to upload the percentage of completion every frequent. So and it should be supported by the inspection of the architect as well as the certificate from the cost, chartered accountant or cost accountant. So that will be automatically justifies that what I'm planning is legitimate. It is not for only GST I'm doing it. Whatever records I submitted for RERA will be sufficient proof to say that my percentage of completion at the end of third year of the project is 80%, and 20% is only the work that is I'm doing after the entering the contract with the customer. Thereby, I am liable GST only on the 20% of the construction cost. That is 10 lakhs in my example, vis-a-vis 50 lakhs or 1 crore in the other cases. So that will give lot of savings. And here again, the documentation is the key. And how this can be saved is, I think, the same methods what you are told, that paying it under protest or customer going for refund. All those mechanisms what we have discussed so far for the land deduction, same can be adopted here also, strategies. But if you see the practically, there will be a lot of tax savings are possible in this method as well. Yes, sir. Sudhir sir and Madhukar sir.
I have only to support you by saying that we have a few clients where they have taken this type of a benefit right from the beginning, from the service tax era, rightly pointed out by you. L&T Supreme Court had clearly allowed this when they explained that even the JDA with the landlord would be liable. It is a works contract, and therefore what they had done in those days is that monthly they used to get this chartered engineer certificate as well as the chartered accountant certificate, and now it is strengthened with the RERA submission. But monthly also can be done, and we have to ensure that when we get into the agreement, this aspect has to come into the agreement, as emphasized by Sudhir when he was talking about what should be there in the agreement. That's all. You can go to the next one. And also one more thing, very important, if you're doing this, remember that ITC reversal will have to be done to that extent. 80% if it is completed, then obviously we'll have to also look at ensuring that the ITC reversal has to be done on an ongoing basis when you do this. That will be an additional complication. So if you have too many projects, you may have a difficulty. If you have accounts on project wise, you may not have a difficulty. Yeah, go ahead.
Sudhir sir.
Yeah, sorry, my internet went bad. I got a bit disconnected. Madhukar sir, yes, the advantage is most of the people who are doing residential, they would be under mandatory 7.5% without ITC scheme. That is 1/3 deduction for the value, which is 5%. So that case, it becomes very easy for somebody
Yes.
to take this thing. As Madhukar sir rightly told, there was an issue which was being countered by the department on this particular thing, is that a total flat was about a crore was agreed, and the percentage of completion when the customer came in was say 60%. So there was a straight away deduction which was been made as 60 lakhs is not subjected to tax and 40 was been offered to tax. If it was not, it is not backed up in the agreement, will have a lot of challenges. This sort of a thing, because what happens is that the percentage of completion in terms of how a consulting engineer looks at it, and in terms of our cost, there could be a chance that the cost is spent more on the internal works rather than the civil works. So in terms of the work, it could have been 60% completed, but it could have cost spent as on that day, it could be only 40%, another 60% cost to be spent. So it is very important that don't get into the ambiguity of just taking a percentage of completion here, and make it crystal clear saying that this was the property when the agreement of sale has been happened, and this is the percentage, this is the value which has been mutually agreed by both the parties for an undivided share of land along with the semi-constructed property, that this is the value which has been there, and the balance is something which has been agreed, and that is what something could have been offered. So that is something which is which you have to keep in mind. Yeah, that's all.
Yes, sir. Then I'll go into the last portion, last area where we can also, make but plan the savings in tax under GST. So this is, I think, most of the people would have been knowing. This is on the where the property where most likely commercial property, instead of we reselling it, we are leasing it. That means we are constructing and leasing it. So all those cases, plainly going by the GST law, the ITC, whatever the on the materials or the services used for the construction is restricted, and they says that because you are not reselling it, if you are leasing it, it will become your own use, and you are debarred from the taking ITC on that construction expenses. That is the section what they have amended, made the in under GST. However, that was read down by the one of the High Court, Orissa High Court in Safari Trades, and they told that when the resale you are extending the GST input, why you should not extend in the leasing business, because in either of the case the necessary the consequence output is getting taxed for the GST. Suppose if I construct and resell the property, I am paying GST on the sale of the property. At the same time, I construct but I don't sell it, but I'm leasing it. So whatever the lease charges I'm collecting, I'm paying GST on it. So in both the cases, the GST has been paid on the full rate and no specific deductions happens. Only it is only the timing of payment. In case of resale, I'll pay GST on the whole amount at one single point. In case of lease, I'll pay it in long run of 6 years or 10 years to recover that entire investment what I make. So anyway, that whatever the extra polluted for the recovering of the investment, I end up paying GST on that. So thereby government is not losing any revenue here. So this is it is constitution also is not correct to deny the credit. So on this principle, the Orissa High Court has read down this provision, and the matter is now pending before the Supreme Court. So in this background, so once the ITC is taken, almost we can save 8 to 10% of the cost, because the major cost for construction, and when you are leasing it, so entire ITC is debarred, so that will be become a cost. So if your ITC is allowed, we can take 80 to 10% of cost directly comes down. So in this background, what we can do is we can take a chance and take the total ITC and the construction expenses, and we can handle it differently, because we are also not sure what Supreme Court is finally going to say. At the same time, government may come and make some necessary amendments in the law, like that they may come. So keeping that uncertainty in mind, what we can do is we have option of taking ITC and not utilizing and just keeping it in the ledger. That is one option. Second option is take it and reverse it under protest and inform to the department, say that in future, based on the future outcomes of the Supreme Court decision as well as the government decision, I would be taking the credit and utilize it in the future. Thereby, we are keeping it open the option of taking the credit, so that that will not become permanently cost. The third option would be that instead of getting into these disputes, you, as far as possible, split the contracts or expenses into separate for the machineries and plant, and give only for the civil work separately. So anyway, plant and machinery work is not, whatever the ITC on the machinery works, that is not restricted. Only restricted is only civil work. So if you don't split this way, if you give a single contract for everything, and there everything was given to the contractor, so you would be giving a bill of worst contract. So you will not be giving a bill for the machinery and separately. Thereby, it will be difficult to justify the or the identify the ITC on the what belongs to plant and what belongs to machinery, what belongs to civil works. Thereby, wherever possible, if the same party also the same party where we have given a single contract, we can give a multiple contracts and give the separate price for each contract, and say that suppose lift is there, AC is there, furniture is there. Likewise, wherever identifiable machineries are the mobile items, we can give a separate contract, and civil works alone can be separate contract. Thereby, without getting into any disputes, we can save a lot of cost here, and we can take the ITC without getting into this dispute itself. This is another area where we can plan the tax and save the tax in kind of where properties are meant for leasing, not for resale. So what you, Sudhi sir and Manka sir?
One of the thing is that if you are very conservative, you could also explore an option of taking the credit and reversing under protest. Another option is that because for taking the credit, there is no interest, you could take the credit, keep it there, don't utilize it. That could be another option which you could look at, pending the decision of the Orissa High Court, which has been challenged and pending before the Supreme Court. So that is one small thing which I wanted to add. That's all. Malika sir?
Manka sir?
Sorry, I was on mute. I wanted to say that the Orissa High Court had looked at two major reasons why they gave this ruling. Number one was based on Article 14 on equal treatment to everybody. And as demonstrated and clearly explained by Venkat, there was a difference of thinking between the person giving it on a lease and the person who is selling it. In fact, when the person who sells it, he will be selling, the valuation would be only the construction cost, whereas the person who leases, it is not only that, it is much more. His profit, his cost of interest, everything is added to that leasing cost. So there is a very valid reason that Article 14 is being violated. Normally, when we look at the Constitution, anything which is violative of Article 14, maybe it's very difficult to reverse it. Even the Supreme Court has very important aspect. When it went to Supreme Court could have stayed the Orissa High Court decision, but they did not. They only admitted it, which means that again one more indication that that case is going maybe in favor substantially of the SSE. We have also seen in our experience with clients, there are many clients who have utilized it also. While we have told them that dispute is possible, they have looked at it. They have said if there is a 10% possibility that a dispute is possible, why should I not utilize the money? In real estate, cash flow is a very important and significant part of our business. We will take the risk. That is the risk taken by the client. So just to bring perspective, by taking maybe a couple of opinions from top class advocates in this area, you might like to then take a reasoned decision and also utilize it. This is something which I thought I should bring out. I have always been very aggressive rather than conservative. While I know that it is possible that it can go against you also. Yeah, you can go ahead.
Yes.
Anything more?
That's all, sir. Now we can take the questions and
I want to add one particular point here.
yes, sir.
There was in the past, even in Bangalore, we had a large number of the resident welfare associations who came to us, and many of the resident welfare many of the resident welfare associations had come to us at that time in service tax, and we had told them that this is an illegal levy because it's against again an article of the constitution which allows associations and trade unions to be set, and it is a like a control on them which is not allowed, and that is what the High Court said, and finally it went to the Calcutta High Court. Calcutta Sports Club case went to the Supreme Court. Supreme Court also agreed that mutuality applies and there is no liability. Now in GST, they have somehow still continued it with making some small changes. But the basic question again is, have they overcome the mutuality aspect? Making laws which are inconsistent with the constitution is not valid at all. And therefore, again, for the resident welfare associations, I am of the view that GST is not applicable, number one. And that is, even if people are paying, they can ensure they pay it under protest. This is one additional item which I am adding to this four things which Venkat has mentioned. As far as that solar thing which you had talked about earlier is concerned, in composite supply, it's very clear that if the solar panels are at 5%, it is a principal supply. The amount of construction which is done is meager, and it would certainly be a rate of the solar panels will be applicable, and therefore one could save 3.1%, and one could also go for refund if it is within the time period. Yeah, that's it. We can take questions from now on.
Hello, sir. Hello.
Yes, please go ahead.
Hello, sir. My name is Givagis. I'm from Cochin, Kerala.
Yes.
Sir, a question regarding joint venture agreement. Sir, we are entering into a joint venture agreement. So if the landlord is getting 30%, that 30% is actually the cost of the land. So whether the GST will be applicable for the 30% share that the landlord is getting? Hello?
Yes, it will be applicable. Mr. Varghese, that will be applicable.
Oh,
because
it will be
the
applicable.
construction service is being given by the builder. But valuation can be based on either that 30%, either on cost of construction plus 10%, which would be possibly the best way, so that your net impact will be very less. Maybe it will be 7% or so. And remember, if that landlord is selling further, he can take credit also. Remember. But
Sir, and for the unsold area of the landlord?
That is gone. That anyway is a sunk cost. That will be a sunk cost for it.
So we can take 5% instead of 18%, or how it can be done, sir?
What is that 80%? I didn't understand. The 80% is based on construction.
For unsold area, anyway, it's a cost. So the cost can be done for 5% or for the 18%.
Unsold
So
area in terms of unsold area handed over to the landowner you are talking about, sir?
Yeah. Unsold area handed over to landlord.
So whatever the total built up area which you are handed over to landowner is subjected to GST.
Yes.
So there you, before this judgment, the thing was that you take the first sale value, pay 5% on the entire total value. And
Okay.
you would be eligible to the extent which he is selling prior to completion certificate, balance becomes his cost. This is
Fine.
what was the view prior to the judgment.
Okay.
So now this judgment has opened up a new view. Two things. One is that should it be a first sale value? That is the question. Second is that the value which you are doing, should it be that 1/3 deduction you have to take, or you can always determine a cost of construction there? Actually, 1 and 2 both goes hand in hand. So you can take the cost of construction there and make a 7.5% based on your cost of construction plus 10%. So that is what has been changed now. Rest everything remains as is. So earlier, for an example, a 1 crore rupees was a valuation and you charge 5 lakh rupees. Now, out of 1 crore, you are saying only 25 lakhs is towards the construction, and 7.5% of 25, you are coming to say around 2% is what you are paying, 2 lakh rupees. So that 2 lakh rupees is to be paid by the landowner to you if you have agreed in such a way. Now in 2 lakh, to the extent what he makes a sale, he will get a credit, and the balance he will become a cost to him.
Okay.
I
Okay.
hope that answered your.
Okay. And sir, one last question. Say, if we want to take input, we should be charging at 18% for construction contract.
Yeah.
And if you don't want to take input, we can charge the customer for the landlord 5%. Am I correct?
Yeah.
Okay.
Yeah.
Okay. Thank you. Thank you.
So, good afternoon, sir. This is Swaroop here.
Yes, sir.
Yeah, I have a query. Now, first 10 minutes I could not, I did not join, so I missed the discussion. Just I would like to have a kind of idea. Currently, all our existing project, we are charging 5% without any ITC for all customers. Now, this Gujarat High Court decision, will it impact in any case in the current scenario?
So that will not impact, sir.
Mhm.
You can continue to charge that 5%. Possibility is there.
Mhm.
However, you have a one tax planning mechanism which has come in. Instead of paying 5%, you could explore 7.5% on your cost plus 10%. Whichever is lower could be adopted.
So in that case, that amount we need to collect from customer, correct?
Yeah, you have to collect that from the customer.
So in that you're saying then whichever is higher, that one you're saying you have to lower, whichever is lower. Okay, so we need to do that kind of planning, correct?
Yeah, and that should be supported in your AOS.
Correct.
In the new AOS, you should say, sir, I am charging you 8,000 rupees per SFT, and it has been mutually agreed, or instead of 8,000, I'll take an example of a crore. 1 crore is a flat which flat along with the land which has been sold. It is mutually agreed that the land value is 60 lakh rupees. It has been mutually agreed because of so and so reason or whatever. This is what is mutually agreed, and the balance 40 is towards the construction. So GST would be payable 7.5% on 40 vis-a-vis 5% on 100.
Right. So in that case, the 60 which you are talking about the land value. So we need to have the proper, valuation method, or rather, I need to have the documentation of the actual land cost, right?
Documentation is not required as long as it's been agreed. They don't look at a basis or a documentation. Say, for example, for giving an opinion, I will charge you 1 lakh rupees. So government will never come and ask you, give me the basis how you charge 1 lakh rupees.
No, sir. So I have a question here. Suppose I'm selling a flat at, let's say, 1 crore rupees. So on the basis of mutual agreement, I can put 90 lakh as a land value and balance 10 lakh is a cost of construction.
Technically, yes. But don't do that because it becomes very absurd.
Yeah, exactly. That is my question. It will be.
So that is the reason what I'm saying is, instead of taking a land valuation, which we get stuck, go with your estimated cost of construction plus 10%.
Yes. That is much more practical.
Say, for example, for a moment you assume that you sold land only, no GST was to be paid.
Right.
If you did only construction on the land belonging to client, you paid GST on that.
Yes.
So in sum and substance, what they want is the GST on construction service,
Correct.
not on the. So thereby, it would be more logical for me to look at what is my estimated cost of construction, add some reasonable margin to it, and make that as the agreed value in the AOS, which will stand the test of the courts.
Correct. Understood. So I have one
That's-
last question. Now, as I said,
One minute, Swarup.
we're charging.
1 minute.
1 minute, Mr. Swarup. Mr. Madhukar wants to add something.
Yes, sir. Yes, sir.
See, one more thing you can do is that you continuously take your chartered engineer certificate on a monthly basis and also a chartered accountant certificate of the cost of construction. I mean, cost of construction or also percentage of construction, which is validated by the chartered engineer. Keep these two documents with you. And based on that, every agreement from that date onwards, you do where you say land and constructed portion is so and so. For example, 80% of your construction is over. Then in the same example which Sudhir took, 60 is the land cost, you removed it. And 40 is the construction cost, 80% is over, 3,200. So 9,200 you say is the constructed value as of today. 800 is the balance construction still liable. On that you pay your 5%. That possibly the combination of these three is the best option available.
Okay.
But remember, disputes will be there. You should be ready for disputes. Your documentation, be very careful, as Sudhir sir said.
Understood, sir.
Madhukar sir, one small input here. Anyway, they are doing their RERA. For RERA purpose,
Yes.
that construction is there. So that can be used here also, because it will be the same. Once what you have done for RERA, it will have a basis for it. It will not be arbitrary.
But RERA filing, you do once in how much time? Monthly?
Once in 3 months.
Yeah, so here I'm talking about monthly. Every time you can change if you want to be very accurate. Otherwise, you can take, like Sudhir says, once in a quarter only you can do and match it with RERA. Don't have any other, no need of any other documentation.
Understood, sir. I have one last query. Now, normally we are charging, as I said, 5% flat, to the buyer. Now, suppose if I charge 5% on basic, and if I have to show separately, like other charges like Discom, BWCSB, and other charges, where so mandatorily we need to charge 18%, correct, on those other charges, and we can claim input on that.
No, sir.
5%.
Other charges also gets included in the base price only.
No,
Because-
that is okay. But if I have to show separately, I'm saying.
Even if you are showing it separately, all those things is arising only because the flat has been sold.
Yes,
You don't per se give a bestcom service, right?
correct.
Somebody cannot come and take just a bestcom service. So thereby, it is a dependent service on your sale of flat. Even a value has been factored separately, that needs to be added to the base value of construction only, and the treatment of that has to be given.
So that means you mean to say we should not show separately. We should club it in the base price, and we have to charge all together.
Yeah.
No. Swarup, it's not correct. Even
Yeah.
if you show it separately, what Sudhir is saying, the concept is there is a concept called composite supply in GST.
Right.
In that concept, it says principal supply, whatever is applicable to the principal supply, the rate, that will be applicable for the other supplies also, incidental supplies. What Sudhir is saying, even if you show separately in your agreement, say you say 1 crore is the cost of the flat and 10 lakhs is all these deposits and other things which you are giving. 1 crore, 10 lakhs will be subjected to that 5%.
Okay, understood. It is clear. Understood. Thank you so much, sir.
Is there anything on chat you can check, Sudhir, and then we can.
Somebody had raised their hand.
Sir, good afternoon, sir.
Rahulji, huh?
Yes, sir. So just
Yes.
wanted to ask what particularly exactly we have to do in case of like we are selling land in a developed area. Suppose we are selling like on that is on the plot area for suppose 2000 rupees square feet, then also we have to show cost of land.
80% కలుస్తుంది తెలుసా?
I think he's talking of plotted development.
Yes, yes, yes.
Mr. Rahul, there was one biggest challenge for the plotting development. There were contradictory advance ruling, but there was one advance ruling where all the issues started up, where they told it is not mere sale of land. There is also a development activity, and thereby this should be considered as a construction of complex, and it should be subjected to tax with only 1/3 deduction of the value of the land. So, considering that that there was a supply of service also, this Gujarat High Court gives a very, very good opportunity, or makes it clear. So what in the sale of plots which you could look at is that you could say you are selling the plot for 25 lakhs. You can say that, okay, 20 lakhs is towards the sale of plot and 5 lakh is towards the development. Again, the concept is same. You look at what is the development charges, maybe 800, 900 rupees per square yard, whatever it has been there, which you incur, calculate that and put that particular value there and pay GST only on the development charges and take the input tax credit, because you are charging there at 18%. Unlike your flats, you unless until you take an extreme step of deviating with the condition and going for an 18% route. For plot sale, there is no 18%, there is no 7.5% per se. There you can pay 18% and take the input tax credit.
And so in case of mixed developments, like in a project, we are selling plots also and bungalows also.
In a same RERA, it will be a different RERA.
It's the same.
Okay, so to the extent of bungalow, first you make a sale of plot, then enter into a construction of bungalow.
No, sir, we do registration at the plinth area, sir.
Okay. So you give an treatment what applicable to that particular transaction. Say, for example, Mr. Madhukar is coming and purchasing a plot with you. You deal with him for the plot. You say, okay, this is for the development charges, Mr. Madhukar. This is for the land, and I'm going to charge you GST like this. And Venkat is coming and saying that I want to buy a bungalow. Then you say, okay, this is the towards the land, and this is towards the what you call already constructed area, like what Madhukar sir was proposing. This is the constructed area, and this is to be constructed area, and charge proposed GST only on that. That is what something could be looked at.
Okay, sir. Thank you.
Mr. Ram.
Mr. Ram, he's lifted his hand. Yeah. Ram sir, you can ask the query.
I think you can take it to somebody else.
Yeah, there are two questions which is there in the chat. I think it was posted while we were discussing something. I'm reading it on the context. It says all this for the existing projects only, right? As new project comes under composition as mandatory. So whatever we are talking about, if at all it is towards the Gujarat High Court decision is concerned, that applies to existing and also for the upcoming. That is how you could plan. And if at all you were referring to the taking input tax credit, there was one option where we were telling that if a condition gets deviated, you can still go ahead and take the input tax credit. So that also applies for both the existing and the new project, because you are not satisfying the condition. Mr. BSR, if you are available, you can unmute and speak so that we get your query properly.
Hi, sir. So this, sir.
Yeah.
That's only, sir. See, as of now, our existing projects, new projects comes under 5%. We are doing.
Fair enough, sir.
Old one, which is continuing, we are
At 12.
the 12% only.
Fair enough.
That's why, see, yeah, according to this new judgment, we can use that for the new projects also as the 5%.
Yep.
Right?
New and also the existing. So
Okay.
existing, how it happens is that 1 crore 12%,
Sir.
in my example, we service 40,000 into 18%.
Right, sir. Right.
So
Sir.
which is beneficial? That is how you look at it.
Right, sir. But in the all the cases, the land cost must be less than 1/3 of the total cost. Am I right, sir?
No.
More
More than. If it is less than, don't do all this sugar.
Yeah. That's what I'm telling. See, if it is,
Ah.
then only it is better.
More. If the land value is actually more than 1/3,
Ah.
then you have to take the pains of doing it.
Yes.
If land value is less than 1/3, just right away go with the notification as is.
Oh, fine, sir. That's what I mean. Thank you. Thank you so much, sir.
I think Mr. Vijay has asked whether it is helpful in the plotted project. Yeah, it is. I already clarified it. It is hugely helpful for the plotted development projects also. So henceforth have an agreement which has a crystal clear bifurcation between your development charges and sale of plot. Only development charges would be subjected to GST at the rate of 18%, and you would also be eligible for taking an input tax credit.
Also, the development cost will keep on reducing as your development is progressing. It will not increase. If you want to take that view also, which is available. Because if I look at any plotted development, laying of roads and sewage, electrical lines, all these are removable property, part of land itself. And therefore, your whatever is completed as on the date when you enter into the agreement, that can be taken to the land and development costs separately, and only the balance construction can be offered for GST, like we discussed for apartments. Here it's even stronger. Yes, I think somebody else wanted to speak.
Mr. Ram has posted his question. Venkat, you want to answer that question?
Yeah, I think we already answered, sir. I think that 5% rate is applicable on the total charges. It's only on the construction. The answer is yes. On total charges, you can take that 5% or 7.5% rate. Only that commission, I'm not clear. Whoa, commission.
So generally, Ram, I think he could not speak, although he had raised his hand. What I'm assuming is there will be a landowner portion also would be sold with the developer, for which he gets a commission out of it.
Okay.
So that commission is not subjected to 5%. It should be at 18% throughout. And advance maintenance, in my view, is the maintenance activity starts after you have handed over the flat. Although you are collecting the maintenance in advance, that is an activity and service which is post delivery of this particular good. So thereby it will not come under a composite supply, and thereby maintenance charges is also at 18%. So that is
maintenance expenses, they can take the credit.
Yeah. Third one which has been asked about is the cancellation charges. So my view, there is no GST on the cancellation charges. So however, when you are taking a refund, you can take an adjustment only net of cancellation. So I'll just give an example. Somebody came and paid you 1 crore and you charged 5% GST, which was 5 lakh rupees. 1 crore 5 lakh rupees was there with you. So this gentleman comes and says for some reason he wants to refund, and you refund only 90 lakhs out of it. So what the GST says is that out of 1 crore, which because you have refunded only 90 lakhs, the GST which you can take it back is only to the extent of 90 lakhs only. So technically what you will do, 90 lakhs plus 5% on 90 lakhs, which is 4.5 lakhs, 94.5 lakhs is what you will refund. 10 lakhs plus 5% GST on that 10 lakh 50,000. 50,000 will go to the government and 10 lakh remains with you. So thereby technically on this 10 lakh 5% GST has been suffered. That is sufficient. No more tax to be paid.
Then one more question is there, sir. I think do we have to pay GST on the development cost in case of plotted development after completion of the project? It is no, because development is completed, no GST at all.
Perfect.
Any further questions from anybody?
Mr. Prasanna Bhai has raised his hand. He wants to speak something.
Okay.
Mr. Prasanna, you can go ahead.
Can you hear me?
Yes, sir.
Yeah. We have a residential project in Bangalore where, as on date, 75% of the project has been sold. And the OC is expected any moment now, maybe, a week to 10 days time. And to the extent of 25 crores, we have input tax credit on the project cost and about 20 crore. And even there is a transfer credit of service tax about 2 crores. So as on date, totally about 27 crores of ITC is available, ST and GST put together. And we have already utilized about 20 crores in our periodical returns, which we have filed till date. My question is now on the OC, I need to reverse the GST. So what extent I need to reverse? And, unsold, sold units also, there is a 50 crore of receivables still to be collected from the customers. So what is the implication of ITC reversal on OC? And on the sold units receivable, what is the implication? And if there are any further cost after the OC is received, whether I can claim input tax on that purchases.
Venkat, you want to take this question?
Yeah, I can take. So, sir, here we can bifurcate into two parts. What is the, I think, as per your calculation, 20 crores is the closing balance as on date, and
5 crores.
25
crores
crores
balance.
Balance, and 20 crores you already utilized.
Correct.
That's thereby I am assuming it is 45 crores is total ITC what you have taken so far.
No, total project cost purchases input tax available is 25 crores. 20 plus 5. 5 is still unutilized. 20 is utilized.
Okay, so what you can do is out of the 25 crores, prior to 2019, it is simply based on the turnover. It is not based on the area. So prior to 1st April 2019, the law says whatever the taxable or exempt turnover of every month, in that proportionate, you bifurcate into your ITC and avail the only taxable portion. For example, you are in a March 2019. So in March 2019, you see the what is ITC, what you have taken in March 2019. And now you see the your output sales. If output sales, all of them at that time in your project, because at that time there is no OC, all of them are taxable. So thereby you are eligible for the full ITC. That is the legal position up to 1st April 2019. From 1st April 2019, the government has made an amendment in the law to say that it is not on the turnover for real estate, it is on the built up area of the total project. So that means they say from the beginning of the project, you take the total input credit and you identify or provisionally identify how much you are going to sell it after the completion certificate. That means which is exempted from GST. Suppose in your project, if you estimate that 100 flats are there at 1 lakh square feet is there, some 80% you are going to sell before completion and 20% you are going to sell it after OC, either because of mortgage or something else. So what government has told from 1st April 2019 is 80% you can take it, 20% you provisionally reverse it. This is all provisional. So now you wait till the end of you getting the completion certificate. Once you get a completion certificate, now you make actual calculation. Earlier you estimated 80%, 20%. Suppose it is now it is in reality it has become 75-25, or in reality it has become 85-15. So that actuals you make it, and whatever excess event you reverse it. Short event you can take the credit. That is what the legal position is. I'm not sure about when your project has started. So what you can do is whatever the ITC event from before 1st April 2019, you can fully take it. You not go for any reversals. Whatever the ITC you have taken from 1st April 2019, based on the percentage of area which was booked and sold before OC, that percentage you can take full ITC from 1st April 2019 to suppose 31st March 2022, and whatever the portion which is sold after OC, so that portion you may have to reverse it. Hope I'm clear.
No. First, now my question is on the sold units receivables.
That's what, sir. That receivables will not have impact because it is on the area. Suppose the sold area is already considered as a taxable area, and to that extent you get the ITC.
So when this 50 crores is collected after the OC, I need to offer. On the OC date, I have reversed the input tax credit by the formula what you have suggested,
Hmm.
50 crores I am going to collect post OC because
Yes.
customers are going to give me after the OC is received.
Yes, sir.
So that 50 crores I need to offer for tax or not is the question.
Yeah, because that area was already booked before the completion. It is liable for GST, and the entire portion of that unit you have to offer for GST. So if you have after that calculation of the completion time,
Yeah.
if you still have ITC balance, you can continue to utilize that ITC balance for payment of GST on this 50 crores.
Right. Okay. That's it. That's it from our side. Thanks a lot.
Thank you. Madhukar sir, you would like to add?
Additional point, Mr. Prasanna,
Yeah.
is that I think there is some decision recently, few days back, I remember reading, which says that the date of OC application is the date of completion, not the date you receive the OC, because there may be a gap of 4 months, 5 months. That may
Right.
also make a difference in your calculation.
Understood.
If Venkat can share that citation, if he has.
Yes, sir. Because that law itself says completion certificate, does not say occupancy certificate. So that that schedule 2 itself says completion certificate by the completed authority, does not say occupancy certificate.
So
No,
not the date
what
of
I'm saying
application.
is, no, I think there is a little gap. I have applied for completion certificate in the month of January. I have received it now in the month of May, the certificate from the competent authority. The date of my application for the completion certificate was January. So January itself is to be taken as date of completion, even though the date of the certificate received from competent authority is May. This is the case I am talking about.
Right, sir. Noted. Noted your point.
That can save a bit.
So, yeah.
I can reverse on the first occupancy than the date of OC you asking.
Yeah. I think that's it from our side.
Okay.
Thanks. Thanks for the clarification. Yeah.
Hello, sir. First April they told no. Some first April on
I think some Saurabh has raised their hand. Can
Hello.
you please explain?
Can you hear me, sir?
Yes, sir.
Hello. Hi, sir. I'm from Raipur. I'm working in a Vinash Group in a real estate company. And my question is that we are paying GST on advance basis, receipt basis from the customer, and we are paying 1% and 5%. And sometimes the scenario comes when the customer says that I want to cancel my unit after the 1 year. So can I eligible for reverse my GST credit shown as an advance GST for my return after 1 year or 2 year?
Sir, how you are showing in your GST return? You are showing it as a
We
advance.
are showing as an advance receipt. Yes, sir.
Yes, yes. You can reverse it and you can.
After a year or second year.
Yeah, you are not showing it as sales, right?
Yeah, we are showing as an advance receipt, sir.
Then I think you can adjust it. If it is not adjustable, you can go for refund also.
And I have one more question, sir. And we are in a real estate project. We are charging 1% and 5%, as per affordable in 1% and non-affordable over 5%. And my question is that we are charging also for the amenities charges like parking charges, maintenance charges also. So should we charging 1% or 5% or 18% on other charges also?
Except maintenance charges, rest everything you can charge the same rate of 1% or 5%. Maintenance, you may have to charge at a complete rate of 18%, and you can take the input of whatever the expenses you incur for maintenance. Suppose you buy a generator for maintenance. Excuse me. That input, all that you can take for the maintenance. And pay GST at 18%.
And for the book, yes, sir. And for the booking cancellation charges, sir?
That GST is not liable on it.
Like we are like a customer deposit 10,000 rupees and we refunded him 9,000 rupees and we charges 10,000 rupees as 10% as a booking cancellation charges. So and we book as a booking cancellation 10% charges as in our books as an income. So we should pay GST on that or not?
No GST.
Refund you take
no
only
booking
on 90. Refund of 5% which you have paid, that you will take
Yes, sir.
only on 90. Refund or whatever credit, that you will
Okay,
take
sir.
only on 90.
Okay, sir. Okay, thank you.
And for the first query, after 2 years also, you have to ensure you will give a refund voucher.
Refund voucher. Yes, sir. Yes, sir. Definitely. Thanks, sir.
Thanks to all of you for taking time on a Saturday in your busy schedule. And of course, you're free to come back to any of our partners in all our locations. We have a very strong base team to support in every location. Thank you very much.
Yeah. Thank you everyone for your
Thank
patience,
you all.
listening and participation.
Thank
Bye.
you, sir. Thank you. Thank you, everyone.
Thank you all. Bye.